Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you as always for coming on.
Thank you for having me.
Well, as we just heard, China's parliament has proposed a hugely controversial national security law for Hong Kong. This is something it's wanted to do for a long time, but it's going to cause serious tensions with the U.S., and this has hit the region's stock markets. What's the story there?
Right, as you said, Chinese government have decided to impose new national security regulations on Hong Kong. Clearly, this is the decision made by China because U.S. has been continued to attack the Chinese government in terms of various other measures related to COVID-19 issues. With this, we saw Shanghai Composite Index falling by 1.9%. Also, the Shenzhen index is declined by 2.2%, clearly putting a quite negative implication. They're having currently the assemblies about the Chinese government's this year's plan that was delayed by about 2.5 months. But a lot of measures regarding the boosting measures were coming out. But despite all those news, this kind of news is putting a dent to the share price performance. And clearly this is putting quite negative implications for various other countries in terms of stock market performance, including Korea. Clearly there's an uncertainty about the situation in regards to the economic plan for this year, as the Premier Li Ka-shing have not set a target for Chinese GDP this year. So overall, uncertainty is rising for the global financial market.
Yeah, and that seems to affect Korean stocks today too. Tell us about what was driving the trade in the local markets.
Sure. As you said, Korean market also fell quite sharply. Kospi is down 1.4% and Kosdaq is down about 1%. Cheongwade, the government, has no conclusive position on U.S. President Donald Trump's administration's stated push for the economic prosperity network, trying to kind of limit and avoid China. However, obviously, we have quite strong relationship with China, so it's kind of sensitive issue at this point in time. So clearly, there's a fight between China versus U.S., and if this continues, then a position for Korea would be quite awkward in a sense. However, though, both countries are going to come up with a very aggressive boosting measures. So Korea, as in a middle, it could be benefiting from the both sides if there's no penalty given just for the sake of a penalty. So hope to see that some of the things will play out, and clearly the competition between China and U.S. is in regards to the fourth industrial revolutions and IT sector. So Korea is clearly a quite strong provider for the supplies chains on that. So it could be the case where Korea could benefit from this kind of tension building. But in terms of sentiment in the short term, though, clearly people don't like the uncertainty. Therefore, Korean markets get negatively affected at this time.
And this uncertainty is driving people towards safe haven assets like the U.S. dollar. We see the Korean currency quite a bit weaker against the greenback. Where do you see the exchange rate going from here?
Right. I think that what U.S. is trying to achieve is that they don't want to see currency depreciated sharply. The reason for that is because if you look at 2008, we saw quite significant boosting measures through the money supply. And with that, we had a subprime crisis for U.S., and that has resulted into a dollar depreciating to as low as 80 or below even 80. And that really resulted into quite a weakness, and actually more weights were given to China in a sense. So this time around, they don't want to see that happening, despite that U.S. is putting huge liquidity into the system, printing money, and the level of the printing money, the money supply is twice the amount of 2008. So clearly, this could trigger dollar depreciation. However, though everyone in U.S. government, and they're saying that there's no reason for dollar to depreciate, they're trying to stand out and saying that U.S. is very strong. So with that, we think that the dollar is not going to be volatile going forward. With that, Korean won should be stable as well. We think that the range bound between 1220 to 1250 should be the reasonable range. Because of that, we don't think that the volatility will be that significant for the Korean financial market.
All right, Mr. Yu, thanks so much for sharing your insights today. Have a great weekend.
Thank you very much.